Let's dive into the world of crypto. Did you know BlackRock is raking in around $260 million a year from Bitcoin and Ethereum ETFs? That's a staggering amount, especially when you consider Grayscale's high fees. They've been the reigning champ, but things are shifting. As the fee war heats up, who will come out on top? Stay tuned to find out who wins this battle for your investment dollars.
Your next point, this number blew me away. I didn't realize this.
Yeah.
I really I don't doubt you, but like you wrote that BlackRock is making $250 million. Oh, it's $250 million a year in crypto and Bitcoin ETF fees. So they're making 250 million of fees on those. Okay. What's the AU?
260.
Okay.
So the
okay.
the AUM, hang on, let me check the chart. And we're going to credit DKI intern Cash and Crow, who always puts together the charts. He does a great job with these. Assets under management for their Bitcoin ETF, that's IBIT, is a little over $80 billion. And their ETHA is more like 16 billion. And BlackRock is making their fees on the Bitcoin ETF $218 million a year. The ETH won $42 million a year. And it's particularly profitable for them because their fee schedule is, what's written here is 25 basis points. I thought it was slightly lower. I thought it was more like 19 basis points. That's from memory, so maybe I'm wrong. But the point of all this is that for BlackRock is a giant fee for an ETF. So they're looking at this saying, wow, this is incredibly profitable. I would point out, to me, there's a big winner and a big loser from this. The big winner are the owners of Bitcoin and ETH and other, non-zero-ish crypto, where, it's worth pointing out that the ETFs were approved by the SEC only 18 months ago. It was April of 2024.
It's the fastest ETF growth in history, by the way, IBIT.
Yeah.
Just so you know, it's not even close.
Yeah, these things have grown by an enormous amount, and they've enabled people to have Bitcoin exposure in traditional asset management in their brokerage accounts. It's also making it easier and possible for people to have Bitcoin exposure in their pension funds, which, that's trillions of dollars. Part of my thesis, Bitcoin is my largest position. Part of my thesis is increased institutional adoption. But, just from a regulatory point of view, look at where we are today versus where we were 18 months ago. You got the approval of the ETFs, you got the Genius Act, you have, the ability, again, for retail, for financial advisors, for pension funds to all get their clients exposure. I just think from a regulatory point of view, we are night and day from where we were just a year ago. And the fact that, the BlackRock alone is managing $100 billion of assets in just these two funds, that's incredible. That tells you where they are on this. Now, the big loser, I think, is the Grayscale Bitcoin Trust, GBTC, where they had the market to themselves for years and years, and they could have had BlackRock's fee schedule on this. Instead, what they did was Grayscale decided to maintain a very high fee schedule, I think more than 2%. So more than X what people are paying to have the exact same exposure at BlackRock. And so, their assets under management are less than 1/4 that at BlackRock alone. Now, people who are, sharp pencil or at least back of the envelope guys can say, well, wait a minute, you're talking about more than 8 times the fee schedule, but, 1/4 of the assets under management. Does that mean they're making more money from this? And the answer is yes, but it's not a good long-term plan, right? Long-term overcharging people and having them trapped for tax reasons, that is a runoff business. And they should have considered maybe being a little bit above the market, but not so far above the market.
So we actually wrote in HX Weekly last week about Bitcoin, but I got another loser. Let's just start with losers. Strategy, MSTR. trades at still, this is what when I'm looking away, by the way, everyone, it's like, I'm not checking my email. And there's no sports scores to check right now. So I'm looking at different data that I'm investigating on my Bloomberg here. Strategy still trades at a 42% premium to NAV. And I'm just pulling this off of, a website. I don't know if that NAV, how much they're taking into account the enterprise value, the value of the debt, but Strategy, MSTR, MicroStrategy, as it used to be called, has actually dramatically underperformed Bitcoin in the last year or last 18 months. And the reason is, IBIT, plain and simple.
Yeah.
Is that all of a sudden people have an easy way to buy Bitcoin? So let's take one side. I think Strategy is highly problematic. I think that 40% burns off. History would tell us, by the way, the Grayscale Bitcoin Trust, I just checked, actually trades at a discount to the Bitcoin that they own. It trades at a 5% discount. So I'm going to argue that Strategy eventually is going to trade not at a premium, but at a discount. So the trade that I love is going long Bitcoin, perhaps even leverage long Bitcoin against Strategy. And let's just talk about Bitcoin here. Bitcoin is digital gold. It truly is. Seasonally, last year, it kind of was sort of punk going into October, and then it flew into year end. Now, partially, we could say that was because of the Trump administration. But remember, when the Trump administration was voted in, we did not know how positive they were going to be on crypto. And by the way, Bitcoin did the exact same thing last year. So, we have had a thesis out there. I think Bitcoin goes to 1 million. I think we see a stair-step function seasonally here with Bitcoin. And let me go back to what I was saying before about AI is, look, I think we've got a very good chance of seeing a melt up in the NASDAQ. If the NASDAQ's up 50%, what do you think Bitcoin's going to do, in that period? Is it going to be down? Will be up 50% or will be up more than 50%. So I actually, and I don't, even though I come from a hedge fund background, I don't really talk about pair trades very much, but I kind of really love go leverage long Bitcoin against short Strategy. And, it's like you got a 42%, premium to burn off. Like, I think you could see your Bitcoin go up 40% and your Strategy go down 10%, So, but yeah, we're very bullish on it. And I think that we've just got, it's 80 billion today. You know what I don't know? Hold on one second. I'm going to look this up. Total amount of money.
By the way, while you're looking that up, do you know what I find to be the most perplexing thing in the market today? All of these crypto treasury companies that traded a multiple of NAV. And when I talk to people like, why are you paying for this? They're like, yeah, but you get exposure to the thing, but you could go on Coinbase and go buy it directly.
It's just the normal, kind of mild insanity we see at this stage of the cycle. What I was looking up, by the way, there are $386 billion in gold ETF assets under management. So when we talk about IBIT at 80 billion or things like that, this is where the upside is. Okay.